One sec. Filters. Okay. What's up, everyone? All right. Yeah. All right. We started a little early, so we'll give a couple minutes. Here today with me is one of our funded traders, Michael. Michael, say hi. Yeah.
Hello, nice to see everyone.
So we're just gonna change up the format once in a while. We're gonna bring a special guest, just a little banter. So it's not just me talking about how I trade; it's how other people trade as well, and who have actually been who have a track record of being paid, and not just some obviously hypothetical demo traders that are out there on YouTube space. So we want to bring you live funded traders that make money from trading, and they can share their journey. Some traders make a lot of money. Some traders make little money, and they're on the way to make a lot of money. It's obviously a growth path. So and the variety will give you, you will learn something from, because your job as a trader is very simple. You need to, as a novice trader, you usually have to absorb an enormous amount of information from various sources. So just listening to one guy constantly, you might, you're not me, right? Your psychology is different than mine. We are all built different. So your job is to listen to as many people as possible, accumulate stuff that works, discard stuff that doesn't work, and that's how you build your own system. That's why we want to bring other people on the air, so you can learn not just from me, but from others, because they all have different styles. You can try this, you can try that, and through experimentation over the course of a year or so, you will learn how to trade better and hopefully profitably, right? So on that note, maybe Michael, introduce yourself, like how long you've been trading, what's your background, just basic info. No need for super details, where you live and all stuff like that. But just brief background so people know who you are, et cetera, et cetera. And please, guys, when Michael starts talking, please can you type Y yes that you can hear him. I'd appreciate it.
Okay. Hi guys, my name is Michael, also known as Mucho Butcher in the Discord and online. I've been trading for about 5 years, since just before COVID. Just like many people, when COVID's happening, you get recommended to you, you start trading. It's something I've liked, because I love maths, I love trading, I love economics. Studied economics at school.
Right.
So when I actually started learning how to trade, I actually started demo trading for 3 years straight before I traded with any money whatsoever, like a personal capital or prop firm capital. And some people just go for it straight after 1 month, 2 months. Some people just start with prop firm straight away. I was extremely patient, and it's benefited me quite a bit being this patient. I've managed to develop my own strategy. I actually made my strategy. I was without watching any YouTube videos, so I didn't even know who ICT was, or all these people. I trade with relative strength index and just general basic price action, and looking at the graph, seeing the direction of the trend, and that's all I need. I've got a background of mathematics as well. I'm naturally been very good at maths as well, so that sometimes I can approach trading from a mathematical approach. Before I get into a trade, I wonder what are the probabilities of it hitting stop loss, take profit, if they were there before I get into the trade. And also, while I'm managing a trade, if a trade is halfway to my take profit or stop loss, I think what are the probabilities of it going more to my take profit or more to my stop loss? If the pros outweigh the cons, keep it open, vice versa. And that's basically how I trade. I keep it simple, and I trade not like most people nowadays.
Sounds good. 1 second. Let me just bump up the volume a little bit. There we go. Some people said there might be a little subtitles. You don't have subtitles, brother. All right. Again, a lot. The recurring theme with every trader who actually gets to profitability is the keyword is discipline and taking their time, because it's patience. A lot of people are impatient, and they have erroneous expectations. They see the ad on Instagram or whatever, TikTok, of some 20-year-old flashing money, flashing cars, and they're like, oh, if this retard can do it, I can do it. And that retard is actually not a trader. That retard is selling you the bullshit, and he's making the Lambo money by selling courses. All right, he's not a trader, and that's what most of these courses are. And that's why on YouTube you pretty much have all the information that you need, just like Michael specified. At least in the beginning in the initial stages of your learning curve, you don't need to be you don't need to be buying any of the courses. Do not buy a single fucking course, because most of the basics at least will be available on YouTube for free from decent guys. And I give this example, like even ICT's old stuff. His name is also Michael. His old stuff is actually pretty good. Yes, he'd been caught cheating and faking his wins, and he can't trade out of a paper bag. But all this, he's been around the block for 30 fucking years, and he can at least he can distill some interesting points in trading, even though he cannot apply it himself because he's already too old and he taught himself too many mistakes. You as a novice trader can apply some of his stuff to your benefit, and it will work. Okay, it's like a coach. Mike Tyson's coach is not Mike Tyson. You know what I mean? Mike Tyson's coach was an old dude who can't fight for shit. You know what I mean? So same thing here. You're the Mike Tyson. You just take what works, you take the theory, and you apply. The theory is correct. All the old stuff, everything from 2015, stuff like that. His early work, not this the current stuff that obviously he blew up during COVID, because pre-COVID he got caught faking his statements, and he kind of went away, and then 18-year-olds rediscovered him somehow and blew him up. So he's now riding his fame. Good for him. But again, every teacher is not infallible. Everybody, your job as a trader is to take something from somebody, see if it resonates with you, meaning you to run tests on those trades, and you take your time, like Michael said. If you're gonna be, if you want to pay rent from trading in month number 2, I have bad news for you. It's not gonna happen. Okay, you're not gonna buy a Lambo. Even if you win ridiculous amount of money, you're gonna blow it all away and then give up the initial investment. That's like the it's a recurring story of ages on Wall Street or in trading. Everybody turned 10 grand into 100,000, then they lost their 100,000, and then they borrowed another 100,000 and lost that too, before they started actually realize, taking it seriously, not just gambling and getting lucky because they caught a streak of something, and then when the markets reversed or consolidated, they were not aware that they're in a different environment. They were kept continuing doing the same thing without realizing that you cannot do the same thing all the time in trading. You need to adjust for different environments. So, Michael, how long did it take you to how long did it take you to become from losing money or demo to at break-even stages to then started finally utilizing prop firms and funding traders to start putting money in your pocket?
So if I remember correctly, for about the first 2 years, I was creating my own strategy with all kinds of things. I was searching online, dabbled with all kinds of indicators, settled with just the relative strength index. I think after the first year, so on my second year of trading, I think that's when I really started creating my own system, finding what works, what doesn't work. And then on my third year of demo trading, then that was kind of like, once my third year finished, that was kind of like I reached 1 year of profitability, most months green, and then I went on to my own personal live capital. However, because I didn't actually research much on the internet. My strategy really was kind of self-made, homemade, and so I found myself, upon further review of my past trading, that my old strategy had like a below 1 risk to reward ratio. So my losers were bigger than my winners, but I had a high win rate, and that's typically the natural direction of what most retail traders at least start off with. And then it's when I found out about prop firms, and then they had these drawdown limits, certain rules. Well, when I started in 2023 or 2022 or something, when I started with prop firms, they didn't have all these dodgy rules. It was just straight 5% daily drawdown, 10% max drawdown, even for the funded trade. I found one members that prop firm, they once had an unlimited leverage account, which was absolutely stupid. But now all these prop firms now have actual genuine sound rules, which can help with your, which does help with your trading. It's changed my trading, so I risk so much less. I always have a stop loss. I didn't have a stop loss when I was trading my own personal life capital, and I've been trading prop firms and personal capital for about 2 or 3 years or something. And I can only just say, after 5 years of trading, it has finally fully clicked. And I personally think it takes 5 years to fully understand trading, not just be profitable, but be good at trading. You can be profitable in 1 or 2 years or something. If you're profitable in 1 to 6 months, it can be due to luck, especially with markets might be only going in one direction for those 1 to 6 months, and that's the only way you're trading, the only direction you're trading. However, with 5 years of trading, you get different presidents, different prime ministers, world events, COVID, all kinds of different stuff, left, right, centre, bombs, wars. You don't get that in 1 to 6 months. It's unlikely. So you really have to experience the whole range of everything. In my opinion, it's 5 years to actually fully understand trading, fully understand the markets. And if you don't after 5 years, then you're doing something wrong, and go back to the drawing board.
Right. See, again, a lot of people don't want to hear this. They think that, you can become a world-class doctor in a year, right? But that's not reality of things. It's same thing with trading, It's just so much stuff you need to learn, and then you have to take so many corrective measures to become a successful trader that it just takes time and it takes reps, right? It's most people expect to go hit the gym for 3 weeks and then they're gonna look like Schwarzenegger, right? And this is exactly what the retail traders are trying to do. They wanna, instead of realizing that this is a multiple year affair to get to somewhere where you're profitable, and you're absolutely right. It takes about 5 years to become competent, where it's you become like more of a machine, and you can actually use it as you're confident enough that you can sustain living from this. Okay, even though you're still gonna have losing weeks, months, etc., etc. It just happens part of the. But over a whole year, you should be, or at least quarters, you should be profitable long term. Okay, so just because you have a setback, don't beat yourself up. It's part of the game, and that you have to be okay with not being right all the time. And that's what the mentality most traders lack. Because we're taught in schools that you have to be right, you have to be right, you have to be right. And in certain professions like engineering or doctors, they have to be right because their lives at stake. In this profession, it's the opposite. You cannot be right all the time. In fact, you have to be thinking in the opposite way. You have to think in probabilities, and you should be okay with just with the uncertain market outcome, and you just try again. And most people cannot deal with that uncertainty, so they either take the winners too soon, or they don't take. They trade without stop losses. Obviously, their capitals, and that's why prop firms, in the beginning, they look annoying. They look annoying because they have all these fucking rules. The reason why they have these fucking rules is because they are set up by people who went through they have decades of experience already. And if you don't have these rules, some people will make money and think they're gods, and then they're gonna blow it all away. All right, and the risk management is one of the I think everybody talks about risk management ad nauseum for a reason. And the less you risk, the longer you're gonna survive. Instead of coming up to the plate and swinging for the fences every single time, or the Hail Mary passes in American football, right? Like the last every time you kind of make a trade, it's either make it or break it type of trading. That's not a long-term winning strategy. That's why you have rules where you make a mistake, it's a small cut, and then when you win, you win. And you cover the small cuts and then some, and you make money, right? That's the whole point of trading. And most people, again, they unfortunately they learn it the hard way. We all learn it the hard way. We all have to be beaten into submission, and market beats everybody. Trust me, market is undisputed king still. How did you start trading? Are you trading more of a forex type of trader, or are you a futures trader, or I know the answer, but for the audience, how'd you find specifically what you like to trade, and what do you like to trade, honestly?
So I basically only trade forex and gold. My most traded pair is gold. I do the majors. Well, some of the majors I do euro dollar, pound dollar, dollar Canadian dollar, and then when I was on my live personal account, I used to do loads of swing trading, carry trading of yen pairs. So I also trade dollar yen, pound yen, euro yen. That's all I trade plus gold. The reason why I trade that is just I was just recommended forex trading at the beginning. I wasn't recommended stocks, S&P 500, all kinds of other stuff, futures, and it's what I've stuck with. I mean, I've learned forex. I'm sure everything else is similar, but I know everything else on paper is similar. The trading itself is similar, but for futures, I'm sure there's slight differences about how you actually have to trade it and all these contracts. I'm happy with forex, so I'm staying with forex and gold.
Yeah, I was adjusting volume. Actually, gold is one of those asset classes which I spoke about it as well. That gold, obviously, for the last years was a phenomenal, easy layup trade. A couple of years, and I've been trading primarily gold myself. Before that, I was trading mostly U.S. dollar against other currencies because, again, you had the COVID and then the rate differential of U.S. dollar raising rates, and meanwhile Europe and the rest of the world were still at zero. So United States bonds were yielding more, thus more capital went into United States markets, and thus propped up U.S. dollar, et cetera, et cetera, et cetera. Right. So this is why the euro went down. When then after it. The ECB and other central banks started equalizing the interest rates, as you can see on my chart. It became choppy, and that's when the gold started to shine. And gold had all the macro fundamental reasons behind it to shine because of the inflation and the hedge against uncertainty, safe haven type of instrument, right? So remember on Monday, guys, I told you about 702. On the money today. This is why I wait for swing trading and not. I like big levels, and if you can see, I can zoom in. One sec, specifically to show that the 702, the halfway point between 618 and 786, it went to the T. It basically bounced exactly to it, and now it's bouncing. It bounced what? Let's say 17, whatever, almost 17 points, 15 points. All right, just bounce. Can it keep on going? Yes. Can it just a temporary bounce and then keep going down? Yes, too. So you can put your stops at break even when this occurs, and if it runs, it runs. If it doesn't run, you get stopped out at break even. But very often on a 4-hour basis on the swing trading, you get bounces from these major levels. Okay, and this today is a perfect example of that. I was waiting for that trade on Monday. Since Monday, or Tuesday rather, right? Anyway, so yeah, we were waiting for this pullback. I thought maybe, yeah, right, this is Monday right here. I thought we're gonna go hit the 702 on Monday, but unfortunately we were selling off in Europe, and then we did a reversal in US session and went up, and then now it hit it 2 days later. All right, so you waited 2 days to do this trade, but again, the trade is not working. So, what type of what's some memorable trades you have, or not memorable trades? What do you trade? Like, first of all, what's your style of trading? Do you trade 5 minutes? You trade 1 hour? Do you trade? What's your style?
Basically, I execute trades on 1 minute, 5 minute, 15-minute, basically, because I'm an intraday trader. My full-time job is trading, so I can afford to. I've got enough time and day to really sit down, pay attention at charts, and wait for the setup. But I do my analysis on the 1 hour and 4 hour, because on MetaTrader, you have a 4 hour chart up on regular Zoom. You see a past couple, 2, 3, 4 weeks of data, and on the 1 hour time frame, regular Zoom, you see about 3 or 4 days. And if you're trading the 1 minute, 5 minute, 15 minute, that's all you need. All you need is the past few days of data. You don't need to know what's happening 10 months ago, a year ago. And then that's how I trade. And then I basically trade with like price action. I really identify trends on every time frame. I don't bother with anything, weekly or above. And then, but I really make sure that I have to get the trend right, because some people will be trading against the trend and I don't even know it, and that's when problems can occur. Some notable trades I've done, as I mentioned earlier, when I started on my own money with my live capital, I started carry trading yen pairs. So there were times where I would be carry trading yen for about 3 or 4 weeks, and I'd be gaining so much in swaps as well. I'd be buying dips on the 4 hour time frame. But this is when my method was slightly different. My method then was still a trend pullback strategy. So I find the trend, wait for pullback, enter, and let it ride. And I think on one selection of trades, I think I made about 15% on one, GBP JPY trade, but bought multiple times, which is about £3,500 ish, which is what my account was back then for 15%. So that was a good one. And then recently, admittedly, in the past few months, I haven't had any banger trades, but let me try to think. Now, I mean, I think gold as well. I was doing really, really well with gold when it was climbing quite quickly, but past few weeks hasn't been doing anything. It's been stalling. It looks like it's coming down now, gold, with the less wars, less inflation, less everything. It looks like gold will come down. But ever since it broke about 2050, 2075, I've just been buying gold. Nothing too interesting, really. I mean, it might be interesting for some people, these trades, but I mean, trading is all about just finding the trend, capitalizing on your movements. And I used to think to myself, this is just too easy, trading gold, buying gold, and carry trading yen. But then that is trading. If you have to find the opportunity, you trade it. It's not really meant to be hard.
Right.
So yeah, no notable great trades recently.
You actually, you hit the nail on the head. First of all, it is about finding one or two bread and butter type of setups that just mint money for you, and that's the goal. The goal of trading is to have 1, 2, 3 major tools in your toolbox, and you just execute them. That's it, and you don't deviate much from that, and that's when it becomes easy, and you can do your work in a couple of hours a day, and that's it. That's kind of the goal, and then you just gave the whole secret to trading. It's basically identify the trend on whatever time frame. If you're trading intraday, look for 4 hour chart will give you last couple of weeks, month worth of data, depending on I have a bunch of monitors, obviously, and on my right and to my left I have just endless charts of 4 hour charts, because I can see what Eurodollar is doing, what Japanese yen is doing, what Bitcoin is doing, what gold is doing, what copper is doing, what oil is doing in the last 3-4 weeks, a month. And that's enough data for me to see if it comes back to, I basically want to see a trend, then I want to see a pullback into some zone, and then a small reversal occurring that I can catch in a smaller time frame. And that's when I enter, and that's it. And it either works or it doesn't work, but probability is on your side, and usually out of, like I always say, treat your trading as a series of trade. Don't marry one trade. Be like an Arab sheikh, have 100 wives, So you have 100 trades, treat them as series of, the whole trading is a series of trades. So if 1 or 2 or 3 are bad in the whole series, it's irrelevant. You don't care. You know that the majority, 70% of them are going to be solid, or 65% of them, or 80% of them, whatever, or even 50%. And with a positive risk to reward ratio, you will be profitable. Even if you do 1-to-1 on 60% accuracy, you're still making money. You just have to have a large enough account and then make decent enough percentages from it, and you're done. You have a couple of $200,000 accounts here, there, and you're making 5% a month. You're doing quite okay. So I would think, right? So you have $1 million in basically under your management within like a year or two. You make 5% a month. That's 50 grand. That's 50 grand in your pocket right there. That's nothing to sneeze at. And you're utilizing other people's money, not even your money, right? So there you de-risk. You kind of offer your skill set, because now the prop firm also are making money by copying your trades. But for us to start copying your trades on a real account with a multiple, meaning 2x, 5x, whatever, I need to see a track record, not just one payout and then you disappear, which happens all the time because somebody gets lucky, they get paid, they get too happy, they go party, drink, then they come back and then they blow it all away, right? And then so we need to see somebody with a discipline and long-term plan approach, and this is how you become successful in this. So all right, I'll just briefly talk about markets, just give an update what the hell we're seeing. As I said on Monday, I was telling you about my bread and butter trade. Again, this was the trend. This is a 4-hour chart. This was the trend since we took out the high. This was the pullback. We respected the fibs every single downturn, but the big one I love to trade is 702, the 618 and 786 midpoint. As you can see, it did produce a bounce, right? So it is producing a bounce now. Whether or not it's going to run, I don't know. But it's always scary because you see a trend, and then the pullback starts, and you think, okay, that trend is over, and then lo and behold, it reverses again and goes into the direction of the trend. And the perfect example of that was, I made a video when the Trump first announced the tariffs and the market started to crash. I literally made a video on Friday saying you should buy. This is going to be the lows, and you should buy them. This was I made it on Sunday. I mean on Friday, and then the Monday was the low, and then it off to the races. This was scary shit to buy, this wasn't emotionally easy, but if I would be trading on my emotions, I would never make money. I would just be like I don't know, like a chicken without a head, right? Running around, headless chicken. Here though, I know that I outlined, it was an hour-long video. I outlined the reason why I was getting long here, and if you have a system in place which has certain rule sets, it removes that emotional bullshit out of your from you. So you don't rely on your emotions, you rely on the system, and that's why it's important to build the system. And to build a system, you need to beta test the system and test the system with small funded account or a small account, until you start seeing that it's a profitable system. And then you just replicate it with more money. And that's pretty much the whole journey of trading. And the system, you obviously make tweaks and adjustments, and then you just grow your capital. The bigger you trade, the less you have to risk in terms of percentages. Again, if you're trading $1 million account, you don't even need to risk, a lot of people who are trading like $10,000 account, for example, they're going to be risking 5-10% per trade. They have 3, 4, 5 losers in a row, and they're pretty much done. They're never going to recover because then they're going to double even more, and then that's how they end up blowing an account. If you're trading $1 million and you risk 1%, that's $10,000. $10,000 a day, or half of that, $5,000. This is how you build up capital. Again, most hedge funds, they produce 20-30% a year. And but 20% of $100 million is $20 million. Okay, that's a lot of money. That's the name of the game. Not to try to juice your $10,000 account or $100,000 account. Treat it as a stepping stone, as a university where you're slowly building track record. Because once you have the track record, money will come to you, because people with money are seeking other traders to fund them, because we can now copy their shit and make money ourselves. It's not there's nothing. It's just capitalism at its best. You help me, I'll help you, and that's it. There's no kumbaya, my lord, kumbaya fucking bullshit going on here. It's just pure win-win for both parties. We shake hands and it's nice. So, all right. I think with this on this. So anyway, same thing with the gold right now. Obviously, because you're, as Michael pointed out correctly, the geopolitical risks have subsided a little bit, and the uncertainty plus the summertime doldrums are hitting the market after a hell of a bullish run. Gold is now consolidating. It's just being in choppy range type of environment. So it's not the easiest. It's not as easy as it was to trade, obviously, for the whole year prior to that, or 2 years. But its time will come again. And meanwhile, if it's not gold, you can trade something else that is trending. Okay. So again, stocks, no brainer, bullish still. All right. So, and retested the lows here, blah, 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 it's trying to rise. You can find a vehicle to trade, and just find, again, it's a lot easier to trade a trending market than it's a choppy market personally. Most novice traders, they like to trade choppy markets because they can buy low, sell high, or whatever, they trade the range, but then the range breaks out, and what happens to them? They don't have a stop loss, and that fucking thing just takes off, but because they're used to the choppy market, they think, oh yeah, it's going to come back, it's going to come back, it's going to come back, and it never comes back, and then they end up blowing accounts. That's why I recommend to find trending markets and just wait for pullbacks, be disciplined enough to wait for a pullback, and once you catch that pullback into the direction of the trend, that's when you enter the trade and into the direction of the trend, and that's probably one of the easiest ways of trading in the markets instead of looking for the reversals or trading the ranges, etc., etc., etc. There is time when you're more advanced to do all that. I do all these trades, but for beginners, again, I'm not going to tell you how to drive an F1 car when you don't know how to drive, a hoopty on the street, right? You don't have a driver's license, so now you're just getting your driver's license. Get a normal car. Learn how to drive because it's scary as shit. You don't understand what the hell is going on, right? I don't know. For those who drive, you remember your first day driving. It's overwhelming, right? So same thing here. The easiest way to do it. You don't want to go to New York City or I don't know, Vietnam somewhere where it's like crazy traffic and everybody cuts off everybody. That's not a good spot for a first day driver. You know what I mean? Go to an empty parking lot, do some circles first of all, just to feel the car out, right? Shit like that. So same thing here. It's pretty self-explanatory as to why you should be trading these, and why make your life more difficult. Again, trending market, everything is lined up. Markets right now, fundamentals behind you. The reason markets are still ripping is because not only a lot of people got bought into the news cycle bullshit. That's another lesson. Don't listen to news, doom gloomer and boomer bullshit nonsense, because this is FUD that is being spread specifically by Wall Street, by professionals. So the people with no brain cells, they give up their positions. Meanwhile, smart money accumulates it and then takes it up. Meanwhile, people are waiting for pullbacks that never come, and they're fucked. Then they're missing all the rally, and this thing is taking off because, again, Federal Reserve is going to be cutting rates. Trump is pressuring, obviously, Powell to cut interest rates, or he wants to replace him, fire him, whatever. So either way, I think it's in the cards, and this is getting priced in right now because as they're going to lower interest rates, as I've talked ad nauseum, it's either going to cause inflation or economic boom, which is a rhyming environment. Either way, the stocks will rally in that environment, at least in the beginning, and then we'll see what happens if we get stagflation or whatever. But at least in the initial stages, you will have the still upside in the markets to come. So when you go on YouTube, I go on YouTube once in a while, and I watch. I would see what big YouTubers talk about. Every single one of them talks about the fucking market crash. Where were you, motherfucker, when this was, your buying opportunity? You can go on my YouTube. You can see the date. It was April 4th. I posted it on Sunday, April 6th. Go watch that video. Literally saying, fucking buy this shit. And instead of more people, and everybody on YouTube, when I was saying buy this thing, we're saying sell. This is the end. This is, don't buy the dip. This, Trump is killing the fucking economy. The world is over. It's the decentralization, the globalization, the fuckingification, whatever the fuck. And what? And all those people were buying into the same bullshit that is being fed by professionals. So you're on the opposite side of the smart money, essentially, because smart money is usually a small percentage which is doing the opposite from the crowd. Sometimes crowd is right, like right now it's already getting crowded, fine. But usually smart money they create those situations so they can sucker money out of idiots and other professional traders. I'm not talking about only retail traders that make those mistakes. A lot of pros were thinking that this is over. Let me, and you never know. You never know when the crash will come. So most of the time, anyway, as I've said, find trending markets. I think the lesson for today would be find trending markets. Wait for pullbacks. I like deep pullbacks, as I've pointed out in gold. I like the 702 Fibs between 618 and 786. On 4-hour basis, this is easy swing. I also scalp. I also do reversal trading. But this is a very noob-proof type of setup that you can make money with, okay? So on that note, I want to thank everybody for coming. Michael, thank you big time for coming, sharing with us. Next time we'll bring you over. Hopefully we can share some more war stories. This was our first webinar like this. We would appreciate if you guys say hi. Give us some feedback. How do you like this format? What would you add, change, do different, etc., etc. We'd really appreciate it. And yeah, thank you all. Thank you, Mike. Speak soon.
No problem.